One of the things that Jamie Dimon, who is the CEO of Chase Bank, said was pay attention to what's going on in the commercial real estate market, because the commercial real estate market has a lot of red flags flashing right now because of the higher interest rates. Let me read you what he said. The offsides in this case will probably be real estate. It'll be certain locations, certain office properties, certain construction loans. It could be very isolated. It won't be every bank. Let me explain what that means, because in the commercial real estate market, the way it works is you don't go out and get a 30-year fixed rate mortgage when you want to go out and buy a commercial office building. You go out and you get an adjustable rate mortgage, because that's the standard for commercial real estate loans. So now if you want to go out and buy a $10 million or a $100 million or a $1 billion office building, you're going to go out and get an adjustable rate mortgage, which is going to readjust every 3 years, every 5 years, maybe every 7 years, but most, I would say, around that 3 to 5 year range. So now, if you went out and you bought an office a number of years ago and you had a lot of debt on this property, like many commercial landlords do, well, that's not a big deal if interest rates go up, because generally what you would do is you would just raise the rents of your tenants. That way now you can support the higher expenses. That's kind of the way it works in commercial real estate, that when your costs go up, you just pass it down to your tenants. Well, the issue right now, especially in office real estate, is a lot of offices are sitting vacant or partially vacant. And a lot of companies are starting to downsize because of the new remote and hybrid work lifestyle. And yeah, a lot of companies are asking their employees to come back, but you're not seeing every office building fill up the way that it was before. Not to mention that we're seeing a lot of companies start to downsize themselves because, well, they grew too big too fast over the last few years. So now, what we have is we have a lot of office buildings that are sitting half vacant, completely vacant, or partially vacant. And now these landlords who own these buildings are seeing their debts readjust in the coming 24 months. And not just the fact that they're readjusting, but they're going to readjust significantly higher. In some cases, almost double interest rates where they were before. Which means if you see your monthly payments rise by 50% and your landlord sitting on this office building that's not producing any income, you can't raise your rents because you can't get more tenants in there. And the tenants that are there are not going to be able to pay or willing to pay the higher rents. And so this is where Jamie Dimon is saying, well, if you have all these landlords that then become underwater on these properties, that they cannot support the monthly payments, they might be forced to sell these properties. And the second issue is there might not be enough buyers. For one, because people might not want to buy these properties, and number two, because the lending might also be slowing down. Let me read you what he said. You're already seeing credit tighten up because the easiest way for a bank to retain capital is not to make the next loan. This is tying in now what's going on in the banking sector. See, when people go out and they buy these commercial real estate buildings, they're getting money from banks. And we're seeing a lot of pain in the banking sector right now. And the reason why we're seeing pain is because a lot of banks are sitting on underwater assets. And these underwater assets are bonds, aka loans. And to give you a little bit of backstory on this, I've covered this in multiple videos, so I'm not going to go too deep into this right now. But banks are in the business of lending. And when in the last couple of years, they went out and bought a lot of bonds, these bonds were valued at a certain price. And when interest rates go up, bond values tend to go down. They're inversely correlated. And so over the last 24 months and 12 months and 18 months where interest rates have risen, bond values have gone down, which means banks have been sitting on a lot of bonds, a lot of assets that are now worth less what they paid for them. So they're underwater on a lot of their investments, which means that banks have been kind of struggling to go out and raise more money because they're underwater on their investments. And so now to shore up some of their capital, what they're doing is, well, not lending as much money. This is the credit tightening up process. So now, look at what's going on in the commercial real estate market, where Jamie Dimon is saying that he expects more sellers to want to sell their commercial real estate properties, especially over the next 24 months, if interest rates continue to stay high, because a lot of landlords might not be able to continue making the payments. Now, in order for them to sell these properties, they're going to need buyers. Okay, well now the buyer has to be interested in buying this property, and then the buyer also has to be able to get the financing. And if we continue to see the higher interest rates, not only is that going to put pressure on the commercial real estate market, but that's also going to put pressure on the banking sector. And so you might have a buyer that's interested in buying a property, but they might not be able to get financing. So what he's saying is the hurdles now for the commercial real estate market are starting to add up because, for one, landlords are going to be underwater, especially in the coming 24 months if interest rates continue to stay high. This is a big if because we don't know where interest rates are going to go. That's where Market Briefs will be keeping you posted every single day. But commercial real estate is here. We don't know where interest rates are going to go, but if interest rates stay high, that's going to put downward pressure on commercial real estate. Then you also have the issue of people being able to secure financing because of the issues in the banking sector. Because if interest rates also stay high, that's also going to put more pressure on the banking sector, and that's going to make it much harder for them to continue making new loans, which then ultimately comes down to, well, what does that mean for the commercial real estate market? And that's the concern and warning that Jamie Dimon was talking about. And this is where now you want to be paying attention to what's going on with inflation, interest rates, and the economy. Now, I know this is something I've been saying for almost 2 years now, but we're really starting to see these things culminate and come together now, and this is where you want to be preparing. I've said this, I don't know how many times, but I'm going to say this again. 2023 is not the year for you to go out and finance a new truck. 2023 is the year for you to get financially smart, learn about money, put money aside. That way, one, you can protect yourself, and then also two, take advantage of opportunities that might come your way. And that starts by right now, you understanding this, learning and building your finances. That way you can protect yourself and take advantage of opportunities that might come your way. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.